All right, one more sound check. Just put something in the box, make sure we're talking to the group, and then we'll roll. Awesome. Thank you. Okay, so here's what we've got. It's pretty straightforward. This is what I just put on the board in the notes, and this is what it is. We're looking at the market coming back. Let me show you what I'm looking at. All right, forget the lines. It's all botched up. When you look at the daily chart, this is the breakout area. They broke above this breakdown candle high, 410.49. Okay, they're coming back to test it. Maybe they come up short, maybe they spike it through, but that is what's going on. Now, what changes the market is if they get below and stay below, it's going to promote another drop, down at least another 20 handles, right? Something like that. Not necessarily right away, but the longer they're below that, the more evidence that builds that they're going to drop another leg lower. But this is that spot where if you're in the risk business, it's a trade. They're not going to work 100% of the time, but this is the spot. So it's like one of those situations where I'm going to take this trade 100 out of 100 times, and it's going to work at least 80 some odd times. That's just the way it is. So is this one of those times where they just fall through, or is this another time where they run a test of a former breakout area? Well, we're going to find out. That's the trade. 410.80, 410.50, 411.07. I mean, it's a zone, and sometimes they're not going to get there, and sometimes they're going to spike it through. So it's a little bit difficult from that perspective to say which one's going to happen. You just don't know. And they're off. 411.73, by the way, is still the pivot. Now, I changed it. All right, so you see Spider's getting a bounce here. Low so far was 411.44. Yeah, that could be it, but they can come back down. You just don't know. But they're in this zone. That's what I was trying to say. I didn't buy it right there at the open, but I'm just saying this is that place. When you look at the big chart, if 411, you look at a daily chart, if 411, whatever that was, is a low and they bounce back up, you look at a daily chart and say, yeah, they came back to run a test of the breakout area. They didn't have to touch it every time. That's what I'm trying to say. It doesn't mean they won't right now. It's the morning, all over the place stuff. And the S&P is bouncing here. So all these numbers can be, but don't have to be overhead resistance. Not a short, just telling you if you're long, if you bought it, you can consider taking profit at any of those numbers. You can hold this thing because running a test of these breakout areas, breakdown area, all that stuff, they can go back and forth for a little while, but they're solid areas, right? That's what we're talking about. Another buy the dip crowd situation came right in this morning. We've seen that over and over and over and over, and therefore it's going to happen until it doesn't. And that was the other thing behind buying of that area. Again, I didn't get it, but if anybody jumped in at the open, you're taking profit. So far, the high was 412.69 against 65, so overhead resistance until it's not. What can you say? This is what's going on. Let's see what we got. It's got to be 1265, 1260. They're bouncing it now, but that's a good area. I'd have to go to 12 and a quarter if they came back down for now. Talk about the concept of what happened this morning and what we typically see, think, and hear, not in that order, based on things like watching TV and reading whatever, and then watching what's happening, seeing the pre-market unfold without any real knowledge. And then I want to pit that against what actually happened and what we talked about happening before it happened. So on one hand, we watch the news and the jobs number is this, and the market's selling because of X, Y, and Z, and A, B, and C, and all that stuff. And they have 9 different people come on and give you 15 different reasons why this, that, or the other thing's going to happen. And all that does is confuse everybody. And they don't have a clue what the reason is the market's selling. The market's selling because they're coming back to test the former breakout area. All those phony jobs number reasons and economy reasons and whatever it is, it's all just a ruse to have a story behind the movement of the tape. The story comes after the movement. If you understand why they're doing, meaning the market, why it's doing what it's doing, then you have a calmness about you and you stop listening to the talking head horseshit on TV. That's my take, is give the market an excuse to do what they're going to do, which is come back to run a test of a former breakout area. It's exactly what happened today. It's laid out before the bell. It happened after the bell. The writing was on the wall. It was just, I told you, 100 out of 100 times. The red on the screen and you're listening to those people, then you have a sense that what is already bad in the pre-market is going to get worse after the open. And the toughest trade to take is the one at the best spot. always. Like yesterday at 415 and change, and today on the other side, 100 out of 100 times. They couldn't really stay above 413.65, and therefore here comes a retest, pullback, a fake out. You call it whatever you want. Doesn't make any difference. 412.50 is support. If below that, opens the door for the whole lows of day and lower thing. How about 412? Watch this. There's your bounce. Have a nice day. 412.50, 412.43 low and a bounce. Anybody take it? Anybody get it? You had to have an order in there. Look at that bounce. Huh. So did the market fall apart because of the economic data, whatever was released at 10 o'clock? Or did they come back down and use that as an excuse to run a test of an important spot and bounce off of it? It depends on how you want to look at the tape. You know how I look at it. But I told you that was coming before it happened. I didn't tell you it was coming, but that was a spot long before, with plenty of time. That was, you had to be quick. You had to have an order there. That's the only way to take down. Very good. Makes me feel good. Second time around, it's not the same. Another bite at the apple, there could be a razor in it. Doesn't mean it won't be support and they won't test it for 5 or 10 minutes. But the first time, best time, always. Just use that rule. It'll keep you away from chasing stuff. You don't want to be chasing the market around. I missed the trade. I'm going to take it because they just came back down. But they already gave you the trade. That's not the same trade. If you missed it, you move on. You don't chase it around. That was a classic run a test, reverse them back up, get back into the eating time off the clock situation. If they can close back above 413.67, they'll run them. All right, so we had a couple takers on the 412.50 before. We're saying if they still ran up into the zone, there's still a short on the table. That's point in the morning. If they came down and spiked the low, I'm a buyer at 410.80 or 410.50 still. And that's the spiders.